In this presentation, we will generate a transaction detail report. This is a great report in order to review information. If we're grading stuff and if we're looking over what we have done, it's a great tool for that. If we are in practice and we want to review what we have done over a time period or review the work of somebody else that has entered the data input, transaction detail, great report to do that. As we go through this, as we enter the data, we will check the data that we have gone through thus far and then take a look at the transaction report and think about types of changes we can make based on the transaction reports if everything does not quite line up. We're going to be doing this in QuickBooks Desktop 2020, QuickBooks Pro 2020. Here we are in our Get Great Guitars file. We currently have the open windows open. You can open the open windows by selecting the view dropdown and selecting the open windows list. We've entered data. We started the new company file. We've entered vendors. We've entered customers. We've entered the beginning balances. Now we're going to review the reports. We've looked at these a bit as we've ended each presentation in terms of the major reports, that being the balance sheet and the profit and loss report. We took a quick look at the trial balance, which is a great tool even if you don't fully understand the debits and credits, because it takes out the subtotals, puts everything in one place, including balance sheet accounts and income statement accounts, in essence giving us a full chart of accounts we can take a look at and the balances as of a specific date in time. We're now going to add to that the transaction detail report. Before we do, however, let's take a look at the main reports. When you're going to be putting things together, you're always going to be checking balance sheet, profit and loss. If you like the trial balance, you could check that instead or in addition. Then we're going to take a look at the transaction detail. And as we do this, just note that when you look at the balance sheet and the profit and loss, if something is off there and you're reviewing something, then you can go to the transaction detail, and that might make it easier to go into that detail and see what is off. If you're reviewing somebody else's work, say they put in the detail for the month, then you might just want to go straight to the transaction report, because it'll show the number of transactions and you'll get a good sense of how much work they actually did given the transactions. Or if you're thinking about billing somebody for transactions that you are entering, the transaction detail report, very good for that as well. Okay, so let's start off. We're going to go to the reports. We're going to start with our favorite report, that being the balance sheet, giving us where we stand as of a point in time. That's going to be the company and financials down here to the balance sheet standard. Within the balance sheet standard, I'm going to change the dates to, let's say, the beginning of the year, 12/31/19. Now, let's say we're reviewing this data now. We're going to say, okay, is the data in there correctly? What we want to do first, I would think, I would do this first, check the date that we are in. And so in this case, we're going to be checking the beginning of the year. If you go through, you want to review these balances, kind of tie them out to the balances we have here. So, and if anything is off in these balances, then you can go in and look at the detail within it by using the quick zoom as we have seen in the past. If you don't see what is off in that sense, you may want to then change the date range. So if I was to change this date range to a later date and say, let's say the end of next year, right? We're going to be entering this data as of 2020. So this is when we entered the data as of the end of the prior year. The beginning of the year would then be 01/01/20. 01/01/20. And that's going to be the beginning of the year that we're going to be entering data in. We should then have the same numbers here, the end of last year, and then the beginning of this year. This is our starting point. If these numbers are not the same, we can try the end of the year, 12/31/20. And if these numbers are then different, that means that there's a timing difference, meaning you may have entered a transaction in a date that was above the date that we wanted to enter the transaction in. And so that's what you always want to check in practice and here. You know, it doesn't just work with a practice problem. Date problems are the most common type of problems. So if you change the date up into the future, you can catch some of those problems that maybe you entered something into the future. If you entered something into the past, you can also check that now when we first entered the data, but that's going to be a little bit harder to detect into the future because you're going to have data that's already in the past, right? So once you close something out, you want to be careful about backdating things. All right, so that's going to be the balance sheet transaction. Once again, if we go to the 010120 at the beginning of the year, notice in the equity section that it will change, that we have everything in owner's equity. That's what we want. So that's the only account we have. We're a sole proprietor, everything rolled into the owner's equity. No opening balance, no net income at this time, because there's no profit and loss information yet. If we were to move one day backwards, however, you'll see that we then have the net income of the $5,500 in there, and we could tie that out to the profit and loss report. So if we go to the profit and loss, I'm going to go to the reports up top. We're going to go to the company and financial. We're going to then go to the profit and loss report, if I can do that. Let's see that. There it is. And then we're going to change the dates. Let's change it to 12/31/19 and 12/31/19. We entered everything as of the last day of the prior period, because we're going to be starting in January 2020. And you'll note then that at the bottom of this report, we got the net income of that $5,500. Now, these two accounts don't make any sense. They're uncategorized. But remember, that's in the prior time period. So that's okay, because if I move to the current time period, one day forward, then I'm going to put my cursor here. I'm going to hit the plus button and the plus button. There's nothing there in 2020. Even if I go all the way to the end of 2020, then there's nothing there for the full date range, January through December 2020. So that's what we want. We don't want to have anything in this area. Once again, if there's a problem in here, if you have something in here, check the date ranges. That's usually the first thing you want to check. Then use the auto zoom to see what that problem might be. Now we're going to go into the transaction detail report and think, well, let's look at the trial balance first. Let's go to the trial balance, then the transaction detail. We'll go to the reports. We're going to go down to the accounting and taxes, and then the trial balance. Now, you might not be used to a trial balance. You may like to look at the balance sheet or the profit and loss, and or both of them, most likely. However, if you get used to looking at the trial balance, it's nice because it takes out all the subtotals, and it just gives you the flat numbers here. So in other words, if I was to see this as of 12/31/19 to 12/31/19, then it shows me the balance sheet accounts up top, and then the income statement accounts, which we have these uncategorized income and expenses is all we have there. And so that's really nice to be able to look how much smaller this report is. It's really nice and easy to look at. Now, of course, there are times when we want to see the subcategory balances, and sometimes we would not. So we do see in terms of debits and credits here, you may not be as familiar with debits and credits. That's why QuickBooks does not advertise this report a lot, because the default report for most people is just simply to go to the balance sheet and profit and loss. However, again, great tool to have here. Note, as you go to these reports down below, if I go to the next day up, those two accounts will disappear, because we will, in essence, have a post-closing trial balance with just the balance sheet accounts. There are no income statement accounts, no profit and loss accounts, because they have rolled out into the equity section. And look how nice and easy it is to check this report. If you want to check your numbers to my numbers, how much faster is this to do it with? All right, whether we know debits and credits or not, that's a lot faster to be checking. If anything is off here, then check the dates, and then go into the actual report. For example, if the furniture and fixture was off, zoom into it, double click on it, zoom in, check the dates, because we want to make sure the date range is right. Or the date range should have something, of course, that will show us the population. It should start at 0 and populate. If it doesn't, then widen the date range until you see when the transaction was entered. That'll give you the detail that you can see for. All right, we're going to close this out. Finally, go to the report that we had been advertised in this presentation that we're going to go to, and that's going to be the transaction list by date. So we're going to go to the reports drop down. We're going to go to the accounting and taxes, and we want to go to the transaction detail, not by account. Notice this one's by account. We would like the transaction detail by date, and that's going to be transaction list by date. So transaction list by date. And then we'll change the dates. I'm going to go as of 12/31/19, 12/31/19. And so we entered, in essence, everything as of the end of last year so that the current year starts off good and we're in the same spot. We're all in the same spot going forward. This report can look a little bit intimidating, but once you get used to it, it's not too bad, right? We got the types over here. This is going to be the type of transaction we have. We had an inventory adjustment. We have invoices. We have bills. We have deposits. We'll get back to that in a second. We have the date. We have the number. We have the name, which will include vendor names, customer names, employee names, and other names, depending on what is called for within the transaction. We have the memo. And if you want to increase the memo line, you can do so by increasing here with these 3 dots. And these memos, most of them are auto-generated in this case because these are generated through the beginning balance process. So QuickBooks, in essence, put these memos in place. Later on, we can, of course, put the memos in as we enter these documents as well. Then we have the accounts affected, opening balance, accounts receivable, and so on. We have the cleared, we have the split, which is the other account. Notice all transactions have at least 2 accounts that will be affected, and so the split will be, in essence, the other account that will be affected, and then we have the amounts. What you're going to want to do is go through these amounts and check them off, tick and tie them off one at a one by one. You may even want to print the report that you have and just basically tick and tie them off. Not completely necessary that they are in the same ordering in this fashion, as long as they're in the same period that we're covering, the same month here. So you want to go through here and just basically check, tick and tie everything off. If something is on this report, on my report, on the report we see here, and not on your report, and you've been following along, then adjust the date ranges, see if it then populates, see if it's a date range problem. And if it's still not there, then you can think about basically going back in and adding the transaction. You can see the type of transaction that is involved up top. Go back to the proper transaction or entering of the data and fix any adjustments that you need to at that point in time. Now, if we look at the type, notice the type is going to tell us basically what QuickBooks thinks of as the driving form it uses to create the financial statement. So the major types we have are invoices and bills. These are some of the major types of data entry kind of forms that we would use that would drive the transactions. Now, you might be saying, hey, I didn't enter any of those things, but you'll recall that as we entered the beginning balances, the opening balances, QuickBooks then used whatever form it thought was most appropriate to drive the type of transaction and record the debit and credit with. And so for an invoice, when we had receivables, it made an invoice. When we entered a payable, it entered a bill. When we entered something to cash, it made a deposit slip. And credit card, we have the credit card. And if it couldn't find anything, then it used a journal entry. That's like the last resort. They're all journal entries. They all have debits and credits, you'll recall. All have, 2 accounts that are affected. But if there's not a driving form, then you just have to basically call it a journal entry, which means that's what the general journal in essence means. Okay, so we have that information. The dates are going to be here. Everything was entered as of 12/31. Then we have the name. We have the memo. These have been generated by QuickBooks. So QuickBooks is basically saying, hey, look, opening balance. That means, we had to put the other side to opening balance, opening balance, opening balance, opening balance, and then account opening balance and so on. The accounts and the split, you note those are going to be the 2 accounts that will be affected because there are at least 2 accounts that will be affected. If there's more than 2, it might put another little indication here that there's more than 2. There might be more than 2 because the debits have to equal the credits, or the accounting equation has to remain in balance. But you might need to do that with 3 accounts. But usually there's only 2, and therefore you can have basically the account and the split. So here's the account, opening balance equity, the split inventory. Opening balance equity, inventory. Opening balance equity, inventory. This is when we entered the data into the transaction or into the item list for the inventory items. Then we have the accounts receivable, uncategorized income. Accounts receivable, uncategorized income. This is when we entered the customers and their opening balance, how much they owe to us. Then we have the accounts payable and the uncategorized expense. This is when we entered the vendor who we owe money to, and that mean the accounts payable went up. Then we have the checking account and opening balance, the 2 accounts affected when we entered money into the opening balance of the checking account. Visa opening balance when we enter the opening balance into the Visa credit card account, loan when we enter the opening balance into the loan account, the furniture and fixtures, and the opening balance being the other side when we enter the information into the furniture and fixture opening balance, and then opening balance and inventory, opening balance, and owner's equity. So review those, double click on them, and go into the detail if you need to double check on them. And if there's something on this report that's not on yours, you can consider checking the dates. If it's not there, add it. If there's something on your report that's not on this report, then you possibly have entered it 2 times, or maybe you've entered something and the data input was a little bit different than what we had here. So you can just go back in there and change, in essence, the number of the data input screen to match out the numbers. Now, when we move forward from this point in time, we will also provide backup files. So if you want to just keep it where it's at and just push forward, you can just restore the backup file up to that point in time, and we could just push through the problem with the same numbers moving forward, even if you don't have the same numbers here and you don't want to fix them. You can just restore the backup, push forward to the next portion.